Not a lot eventful of a day. Most of the days, pretty much the entire day's range was just about made in the first 30 bars, but a lot of trading range price action for the past 50 bars. On the weekly chart, the rally today managed to close the day on its high. We have a bull bar, but fairly small bar. But today closed the week on its high. So overall, good bar for the bulls. It's a good follow-through bar. But what do you notice about the bar? The bar is smaller compared to the prior week. And so I still think we're probably going to find disappointment and begin to go sideways fairly soon. But enough of a breakout. Ask yourself, what are the chances that the market's going to sell off all the way back down to 6,400 over the next several bars? Well, the odds are against the market selling off, going straight down. And because of that, more likely, if we sell off to 7,000, which I think we probably will, and the all-time high, we're probably going to get to 7,000, which would be below the prior all-time high. I suspect the odds are we're going to get some kind of second leg. So bulls will buy and look to scale in lower. The daily chart, we have an expanding triangle, but right at resistance, the 7,200 round number. And again, I think odds are we're probably going to have to start going sideways for several bars fairly soon. So I suspect the downside is probably going to be limited. But I do think we'll probably have to go sideways for the next several weeks. The upside is probably limited without the market at least going sideways and pulling back. And that's because the risk is big for the bulls. 5-minute chart. I mentioned that on the Globex session, we had that strong breakout around 6:45 Eastern time. And that was a strong enough breakout with follow-through. The odds were we were probably going to get some kind of second leg. And when the market pulled back, it opened around this area. And when the market opened around this area, that increased the odds that we were probably going to find buyers and reverse up. So I thought the odds were pretty good that we may try and test, somewhere up here, maybe the midpoint, but it was reasonable to think we'd probably test somewhere up there. 5-minute chart. We formed a bear bar closing on its low on the open today, gapping up above the trading range. And it's a decent bear bar, probably strong enough for a second leg down. But because of what I mentioned on the Globex chart, I thought the odds were against the market falling significantly on the open. The downside is probably limited. Then we formed a bull bar on 2, good for the bulls. Good bar for the bulls, increased the odds. We'll probably get some kind of second leg down or second leg up. And then 3, we have a bear bar testing back down the 1 close, probably going to fall below 2. But I expect the bulls buying above 2 and scaling in lower probably will make money. Now we have a second entry buy with 4, but it's also a possible micro double top. The market sold off on 2, rallied on 3, sold off on 3, and is starting to rally on 4. If we sell off on 5, we'd form a micro double top. And then 5, outside down, good bar for the bears, increase the odds. Now we're probably going to get some kind of second. It's a good bar for the bears. It might get follow through, but a bear breakout, pause, bear breakout, and because of the Globex chart, I suspect the downside is limited. And then 6, the bears tried to get a bear breakout and sell off below the moving average. You can see what happened. The market found buyers. With the gap up on the open and the 2-legged pullback to bar 6, you can also call it a wedge, double bottom with 1 and 4, but not that great of a double bottom. Anyways, failed breakout of a tight trading range, and we reversed up. That's a decent buy for the bulls above 6. It's a low probability buy. If you're taking the buy, you put a stop below 6. A couple choices. You can buy, put your stop below 6. You can buy, put your stop and measure move down a bar 6. Or you can buy above 6 and trade a half size position. And then we get stopped out below 6 and you get a reversal up on 7 or the following bars. You buy a full size position. And we sold off on 7, but failed to fall below 6. And then the bulls, they got a follow through bar. Not a great bar for the bulls, forming what looks like a tight trading range. But the bulls who bought above 6 are still on the swing buy with their stop below 6. 9, we broke out to the upside and formed the doji. Not a great sell, probably buyers below. And then 10, we formed a bull inside bar. At the moment, triangle breakout mode. Probably at this point, it's triangle, so it's really not great probability for the bulls. But I suspect the odds are the bulls, it slightly favors the bulls. And then doji 11, not all that great. Probably going to continue to go sideways. Tried to break the downside 12, but holding above the moving average. And we're forming a higher low with 6. So that's good for the bulls. And 13, another bull bar, forming a prolonged triangle and a possible higher low with 6. And then we broke to the upside with bars 14 and 15. 14 and 15, bull break out of the triangle, good for the bulls. Probably going to go at least a little bit lower. And then more follow through on 16, good for the bulls. I expect the first reversal down is probably going to be minor. We formed a doji on 17, but not a great sell, probably buyers below. And then 18, second leg up, good for the bulls. At this point, I think this rally is decent, that we're probably, we're right around here, and we're probably going to try and test up to the top of the breakout. So for the bears, not looking all that great for the bears. For the bulls, it's tough to be long. For the bulls, it's tough to hold long. A lot of overlapping bars, but from the perspective of the bears really don't have a credible sell. And outside up on 19, good bar for the bulls, probably going at least a little bit higher, but a channel phase. And that makes me think we'll probably get bad follow through on 20, and then or 21. 21 bull bar, good follow through for the bulls, but top of the channel, so we may pull back. And then 22, a bear bar. But so far, bears not making money below bars increases the odds that there's probably more traders buying down here rather than selling. And 23, outside up, good for the bulls. Probably, it's tight enough channel that I suspect the first reversal down is going to be minor. Bear bar 24, probably buyers below. And then we formed an inside bar 25, but really not great selling in here. The channel up is just far too tight, and the odds are against the market selling off all that strong. And then 26, bear breakout below 24, but again, I still suspect buyers below. And then 27, we got that surprisingly strong bull bar. Good enough bar for the bulls, increase the odds we're going to get some kind of second leg. But look where you are. You're right at the 7,000, 7,200 round number. And the odds are there's probably sellers around that area. Plus, big looking bull bar late in the rally, that increases the odds that we start to go sideways. Exhaustion bars or climactic bars, pretty much the same thing. An exhaustion bar typically leads to a trading range, not an opposite trend. So when you see a big bar like 27, it's really tempting to look at it and say, wow, what a strong bar. Maybe I should sell it. But the reality is, traders taking the sell, they're basically betting that the market's going to pull back to the bottom third of the bar, maybe the midpoint of the bar. So it's really not as strong of a sell as it appears. In doji, you can see traders looking to buy a pullback after 27, bears selling the close, trying to buy back their shorts at the breakout point 23 or around the midpoint of 27, and bulls trying to buy at the midpoint of 27. And then we have a doji 28, and then a second leg up 29. 29 is a high one buy, but I still suspect there's probably sellers above the bar. And then 30, bear bar, inside bar, probably limits the upside. And I still think we're probably going to have to go sideways and pull back. Ultimately, I think we're going to try to get down to the breakout point, 23 high. But the rally from the 26 low up to the 30, up to the 28 high is fairly strong, and that limits the upside potential. There are probably buyers below 30 scaling in lower. 31, we broke below 30 and we reversed up 31. That lowers the probability for the bulls, increases the odds. 31, high one buy, not a great buy above, probably sellers above, increases the odds that we may end up getting a pullback here. And then 32 outside down, good for the bears, but I suspect buyers in this general location, and not all that great of a location for traders to sell. And then 33, we formed 33. We have a bear inside, an inside bar, not a great sell, probably buyers below scaling in lower. I do think we'll test the moving average and 23 close, but we came within 3 points of the 7,000 round number. And so we may find buyers down here and have to bounce. 2034, not a great buy, not a great sell either. So probably going to go sideways. And you can see which went sideways for the next several bars. The bears tried to break the downside below 39 and below 34, but they could not get a strong bear bar and they could not get follow through below the moving average. And what happened? Traders bought. The problem with buying is by the time you see the following bars, 40 and 41, you're buying a little bit high in the range, and that increases the odds that we may just go sideways here. 42, a bull bar. Now we have 3 consecutive bull bars, probably buyers below in a second leg. And now we have the doji, 43, not a great buy above, so probably sideways. And then 44, a bear bar, but right at the moving average. And then 45, doji, and really not exciting price action. Looks like we're in breakout mode and the market's deciding, do the bulls have enough energy to touch 7,200 round number, or do we have to get the bear breakout and test down to the 23 breakout point high? In other words, is the 7,200 round number sufficiently tested? Bear breakout 76, good for the bears, but right at the moving average, and then surprise, surprise, the bears get disappointed with 77 or with 47. 47 bull bar, but we talked about that bar. It's a relatively small buy signal bar with a pretty big tail below the bar. So it's not as strong of a buy as it appears, and it's a weaker buy. If you're taking the buy, it's probably better to put a stop, maybe 1 times the range to the downside, because there's probably more traders buying below the bar rather than selling. And then bear bar 48, not a great sell, probably buyers below. Then we got a second entry at 49, good for the bulls. Looks like we're going to get the bounce. And then 50, 51 consecutive bull bars, good for the bulls, but probably going to go mostly sideways. We still may try and get a second leg up and test 7,200. So right now, it's on the swing buy above 47 or above 49. So far, the bears don't have a credible sell. And then bear bar 53, 52, good for the bears. Possible micro double top 50, 52, but not a good sell. Probably buyers at the moving average. And then bulls got a surprise breakout to 7,200 round number on 53. Tail above the bar, forcing bears to. What about selling the close? It's not really a great sell to close bar. It's forcing bears to sell, right below a fairly big bull bar. And 53 is already pulling back a good bit. It's closing below the midpoint of the bar. So we still may have to test up to the top of the bar, but overall, I think that 72 is telling. I keep looking at 7,200 and saying 72. Overall, I think 53 is giving us strong information. It's telling us that there's not a lot of buyers at the 7,200 price level and around it, and therefore looks like traders are selling and scaling in higher. But tight trading range inside of a bull trend day. Unfortunately, this day has gotten me every time. I can't go 30, 40 seconds talking without yawning. That's why you keep hearing me take all these sudden breaks. It just kind of happens suddenly. But 53, it's not a great sell below the bar because the channel up is just too tight. You can see it over here. I believe I made a comment in the room that not many traders are all that excited to want to sell below a bear inside bar closing on in a bottom third of the bar with a tail below after this many bars up in the micro channel. That's a fairly low probability sell. That's why it's really not that great for traders. So selling here is still not ideal. Bear bar 54, probably bad follow through, and then we got weak follow through 55, increase the risk of buyers somewhere down here. And then we found buyers below. What about buying above the 56 high? Well, buying above 56 is really not ideal. It's a high one buy. Therefore, there's probably more sellers above the bar. And then 57, bear bar, not that great of a sell, increases the odds. Not a great buy above, not a great sell below, but we have magnets below, so I think we may try and break the downside. 58, bear bar, not a great sell. And then minimum follow through 59, not a great buy above, so it may go a little bit lower, but I expect we're probably not going a lot lower. And 60, breakout, pullback, sell. But we triggered a buy above 59 and 60, and even though it's a good looking bear bar, it's a lot of overlap relative to the bars to the left, plus there's no gaps in the sell-off. The market reached the 57 low, and therefore bulls who bought the 57 low and more lower made money. Really not what you want to see if you're a trader looking to buy or looking to sell. Bull bar 61, good for the bulls, but I suspect the upside is probably limited as well. And then 62, consecutive bull bars, good for the bulls, probably buyers below in a second leg up. 63, breakout, pullback, sell, but right at the moving average, not ideal. And then tight trading range, really not worth doing anything. And the bulls finally got a second leg after 61, 62, with 66, 67, 68. That's good for the bulls. But as far as buying up here, you're buying high near resistance in an overall trading range day. And that lowers the probability for the bulls. Best looking bull bar of the 3-bar breakout and inside of a 5-bar bull micro channel, that might be more profit taking on this bar. And in 69, we have a weaker bar indicating bad follow through after the breakout. Really not ideal. Enough of a micro channel. I suspect the first reversal down is probably going to be minor. And the bears, they try to get the breakout on 70 and 71 with follow through on 72. But this breakout is starting to stall, and it might be a 50% pullback from the rally. So we may have to bounce and retest the highs. But so far, it doesn't look like that we're going to go all that far before the rest of the day. And the market just went sideways for final bars in the range. Typically, it's a good rule of thumb. By bar 72, if you're in a tight trading range or some sort of trading range behavior, you're probably going to remain in a trading range for the rest of the day. And that's why bar 72, it's kind of that 30-minute mark before the market closes, so to speak. And a lot of traders look at bar 72 as kind of that last trade opportunity. And if you're gonna get a stop order that's decent caliber or decent, reasonable stop order, you really want to see it trigger. You want to see it kind of set up for bar 72. Otherwise, by bar 72, usually you're going to form a trading range. For stop orders, I thought the buys were better than the sells because of what I mentioned over here with the strong breakout on the Globex chart. Probably buyers down here, and it's a late leg. 1, 2, 3. So this sell-off here was already a late leg on the Globex chart. And that's why I thought buys were better than sells. But if you're buying in here, you really have to be able to, it's better if you can scale in lower. These are low probability buys. That buying above 6 is probably okay. Stop below 6, and then really no good sells in here. If a bull got out for whatever reason, they could buy again above 13, or they could buy the follow through 14 or 15. And then as far as the bears, there's no great sell in this general location. And then when you see the breakout, 27 up to 29, I think bulls get out below 38. Not a great sell below 38, fairly low probability. But if they do, where do they buy again? And they don't have to buy above 40. It's probably more sideways trading likely. But then when you start to see 47 and 49, if you're trading always in, theoretically you got to find a way to get long again. But buying inside of a tight trading range is generally low probability. It's really not a great buy above 47. And it's better if you can use a wide stop scale in, but even then, it's not ideal. And then one of the problems traders have with using wide stops and scaling in, they'll buy above 47 and they'll put a stop, maybe a measure move down, and they'll end up naturally trading too large. And that's why I think most traders shouldn't do it. And I don't think it's really that great it's not all that great anyway, of a buy area in the first place. And then that's probably it for stop orders, and maybe sell below 54, but if you do, you got to get out longs above 61. And if you buy above 61, you probably get out of the longs below 70 if you understand the context. 2 legs up and a possible wedge. 1, 2, 3. For limit orders, lots of limit order trading. just basically buying anywhere. You can buy below bar 2, buy below 4. You can buy at the moving average. You can buy the bottom third of 6 on 7. You can buy the bottom third of 7 during 8. Buy below 9, buy below 10, buy below 11. Any of those lows are probably okay. Buy below 19, probably okay. Buy below 21 or 22, probably okay. You can sell above 31. That's probably okay. You can buy down here, probably okay. And pretty much the same over here. But I think it's tough to trade limit orders for 50 bars, plus this range was fairly small compared to the bars to the left. Buy the close, sell the close, probably buy the close 15, 16, 17 for a second leg up. What about buy the close 27? I would not. 27 is a surprise. It's fairly a big bar with big risk. I think it's better to, at that point, I think it's better to trade the market like a trading range and instead like to buy pullbacks. And you just don't get any quality pullbacks at this point, which led to a sideways market for the rest of the day. And then all of this is basically do the opposite. You see 2 bars down, you look to buy. You see 2 or 3 bars up, especially if it's 2 or 3 legs up or 2 or 3 legs down, and you look to fade the breakout. Let me take a look at questions. And then, so where do we go tomorrow, or where do we go Monday? Well, they've been expanding triangle late in a rally. And we're really far from the moving average. And that makes me think the odds are we're probably going to continue to go sideways and drag the moving average closer to the current price. So the chances of the market getting a significant rally from here without first pulling back, I think is pretty low. So I suspect next week is probably going to be a disappointing week. So if we go back to the weekly chart, if this is the weekly chart and this week is relatively small, what do I think next week's going to do? We have volatility expansion, so range expansion here, and then the range is contracting, so the market's getting more contracted. Volatility is decreasing this week. And because of that, if you think about it from that perspective, that makes me think that it's possible we try and get range expansion and try and break to the upside. But if we do break to the upside next week, I suspect we'll probably get an early opening reversal. And therefore, I suspect next week is probably going to be an overall disappointing week for the bulls. But we'll see. Okay, let me take a look at a couple of questions, and then we're going to call this a day. Hope everyone has a great weekend, and I will talk to everybody later on.